In our first 0 to 100K video for 2025, we are going to look at speculative investing and whether it is worth the risk for your portfolio. Hold on to your seatbelts, folks. This is going to be a good one. When artificial intelligence began to make waves in the technology sector, many investors were eager to jump on some of the AI startups that perhaps had the potential to explode. And some of them did, for sure. But for the most part, it was pure speculation, and it often equated to were you lucky enough to jump on the right stocks to ride that AI wave? Of course, betting on the bigger tech stocks like Nvidia, Microsoft, or Meta was a better play. It allowed you to step away from that speculation. AI is not done by any long shot, and now there is a new area in tech that has investors back into that speculation mood again. That that is the world of quantum chips. Once again, if you stick to the tried and true tech companies, you will benefit from quantum just like you would have from AI. However, if you do speculate and find the right up and coming quantum stock, you could do very well. However, that does come with a lot of risk because for every quantum stock that makes it to the moon, there will be many more crashing and burning for sure. When it comes to speculation, it goes without saying that you do not want to risk more than you are willing to lose. I often refer to this as your play money fund within your portfolio. Of course, foregoing speculation completely is the 100% safest way to go. But for investors who need the thrill of the chase, then allocating a small portion of your portfolio to more speculative investments is something you may want to consider. For the challenge, I do want to allocate up to 5% of the portfolio to a wee bit of speculation. For this month, I did open a pair of speculative stocks, which amount to a 1.75% stake in the portfolio. We will see what we can do with a pair of quantum stocks, and so far, they are both in the green. Please, whatever you do, keep in mind that speculation is 100% risky and there is absolutely no guarantee of a return. A sub to the channel is a 100% guarantee of future content. Okay, let's get into the challenge portfolio. We will start with the stocks that we have not added to in this cycle. We have Scotiabank, who has a total return of 30.27%. CNR, they dropped quite a bit, 2.17%. 2024 was not a great year for this railroad, and I am expecting a better year in 2025, provided the tariffs can be resolved sooner than later. Otherwise, oh boy, it could be an interesting year for sure. Diversified royalty coming in at 6.09%, and we got good old Canoe at 34.72%. That's not too shabby. Fortis doing nicely at 15.77%. And PHX Energy, oh boy, they're down a wee bit, negative 0.11% on that total return. Looking at Pizza, they are in the green, 0.78%. QQCL, the tech ETF, looking good, 18.15% total return. RioCan sitting at 5.24%. And Timber Creek Financial, they are struggling a little bit, down 2.18% to the negative. Oh boy. I am still bullish on real estate and do have high expectations for this year. XEG, that's my oil ETF. They're in the negative right now, currently negative 1.26%. And good old VFV looking strong, up 11.03%. Okay, let's switch gears and look at the stocks we have added to this time around. We will start with Bell or BCE. I did add one share, taking us to a total of 13. We currently have a total return of, well, negative 14.36%. I will continue to average this one down as I do plan to ride it into recovery. Hopefully, we will see some of that this year. Now, looking at Bird Construction, I added 5 more shares, taking us up to 11. Their total return in the challenge is sitting at 10.64%. They definitely had a buy the dip opportunity this month, and I was there to take advantage of that for sure. Speaking of a buy the dip opportunity, that takes us to Canadian Natural Resources. I did add 2 more shares, taking us up to 14 in total. And you know what? If they have another low month because of the tariffs, I'll be adding more for sure. Up next, we have EBIT, I did add two more, taking us up to 17 in total. They're currently sitting at a total return of 11.08%. Good old HMM.A, so Hammond Manufacturing. I am still very bullish on Hammond, so I added 10 shares, taking this position up to 45 shares and a 5.82% total return in my portfolio. That takes us to that new JP Morgan Tech ETF, JEPQ. I did buy five more shares for a total of 10 shares and a total return of 5.17%. This is, of course, a newer ETF, and I do have high expectations for it. Next, we have RMAX, one of my favorite real estate ETFs. I did add five more for a total of 45 shares. They are currently a little bit low. They're sitting at a 0.77% total return in the challenge. But as I said earlier, real estate is one of those sectors I am angling towards in 2025. Up next is SRV.UN, so Sir Royalty. I added five more for a total of 50, and we currently have a total return of negative 3.63%. This is another one I am expecting to keep climbing as we move through 2025. Now, looking at cash, I did add two more for a total of seven shares and setting my cash position at 2.86%. I will continue to add two more shares each month, although I'm probably going to push that up to three shares by the spring for sure. I also added one share to one of my US ETFs, so SCHD, that's the Schwab US Dividend Equity ETF. So that takes them up to 12 shares in total. They currently have a total return of 2.75%. Let's take a look and see what I added to the challenge. I did add three new positions this time around. We will start with MSTY. And you might be going, wait a minute, you already have MSTY. We'll explain. I basically opened a 40 share position in the harvest version of MSTY. I do like some of the new harvest stocks, and this is a good one to give me some additional exposure to MicroStrategy. The other MSTY, well, you're going to see what happened to that stock a little bit later. Next, we have BlackBerry, so BB. This is the first of my speculative positions. BlackBerry is a strong quantum play due to their focus on cybersecurity and quantum resistance encryption. I do feel this could be a big thing. Thus, BB is the safer of my two speculative positions. I did open with 20 shares. My next speculative stock is D-Wave Quantum. They specialize in quantum annealing, a unique approach to solving optimization problems that classical computers, well, they struggle with them. There are lots of commercial applications for this. Thus, I did open a 10-share position. Those two are the speculative positions that I did open. So we'll definitely be keeping a close watch on both of them. We did a fair amount of buying in January. And of course, to finance that, we did say goodbye to one position and we took some profits from another. All right, so the stock that I sold was my MSTY, the Yield Max version. I did close this position selling 15 shares for a staggering $344.09 profit. I did use this sale to fund moving into the harvest version of MSTY. I also sold two shares of Brookfield Asset Management for a profit of $74.80. I do love this stock a lot, and I will buy more in the future, maybe in 31 days if the price contracts from the current highs. So as you know, once you sell a stock, you can't buy it back for 31 days in your TFSA. Otherwise, the CRA takes a hard look at you, and they could certainly move in and say that you're day trading. All right, let's take a quick look at the overall portfolio. January was a good green month on the market with a few major buy the dip opportunities along the way. I certainly took advantage of them, that's for sure. Looking at the numbers, we did add another 500, taking our investment up to $9,500. The community added another $72 for a total of $891 thus far. Oh boy, you guys absolutely rock. When all is said and done, that added up to a $10,391 investment in the challenge. We also received $104.33 in dividends for a total of $620.34 to date. When we add in the dividends and that growth, we get a portfolio value of $12,219.10. This takes our total return for the challenge up to 17.59%. I am still eyeing that 20%. We may have to wait for the tariff situation to get resolved before we get there, but I'll keep my eye on it nonetheless. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there is a link below to sign up to the app. According to Blossom, our top 5 represented sectors are financial at 18.9%. I love it. The sector is back in line with where I wanted it to be. That's great. Industrials 17.7%, energy 16.1%, real estate 15.3%, and pulling up the rear, consumer cyclical 11.1%. I am more or less happy with the current mixture. It is time to look at the toad and the goat of the portfolio for the last month. Our top 5 worst stocks this month are, well, coming in at number 5, we have XEG. They fell by 1.26%. Number 4 is Timber Creek Financial. They're down by 2.18%. In our third spot, SRV.UN, Sir Royalty, down 3.65%. And this is amazing. CNQ is number 2 on the toad list, negative 3.75%. They have for the longest time been vying for the GOAT title, so they've definitely fallen this month. And of course, the toad of the month is no surprise. BCE, they're down by 14.36%. Oh boy, let's look at the GOAT for the month. Our top 5 best stocks this month are at number 5, D-Wave, QBTS, up 26.66%. That's one of our speculative ones, so we'll see if maybe I picked right. We'll find out. At number 4, we have TransAlta. They're up 30.22%. Number 3, Scotiabank up 30.27%. Number 2, look at this, Canoe still hanging on for that fight for first. They were up 34.72%. And our go-to the month is, well, Brookfield Asset Management coming in at 71.99%. You can see why I skimmed a little bit of profits off of this one this month. I am liking what I am seeing at the top for sure. Our next 0 to 100K video will be in the first week of April. Nonetheless, we will still give a March update on the community tab. And you can also see what is going on with Blossom. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on CNQ. Thank you for watching, and I will see you in the next video.